After giving you a brief introduction, this lecture will focus on assets part of balance sheet. We know about balance sheet. Balance sheet presents a summary statement of one's financial position. It provides the list of assets, liabilities, and equities that a company holds at a given point in time. So, balance sheet provides the list of assets, which are normally two types, current asset and non-current asset, and list of liabilities. Liabilities are also two types, current liabilities and non-current liabilities. In the meantime, balance sheet also provides list of equities that a company holds. Let's look at the balance sheet of Bata Shoe Company Limited. The Bata Shoe Company Limited has total assets equal to 9,089 million taka, and these assets are financed by equity and liabilities. Liabilities are 4,100 million taka and equities are 4,988 million taka. Now, consider a different case. Assume that you have got a business opportunity. For your business, you need to purchase a delivery van which requires an investment of 20 lakh. So, once again, to purchase the delivery van, you need an investment of 20 lakh. You have 5 lakh taka to invest, and you need 15 lakh taka bank loan to purchase the delivery van. So, value of your delivery van, which is 20 lakh taka, is your assets. It will be on your left side of your balance sheet. Then, your investment, which is 5 lakh taka, this will be on the right side of your balance sheet as equity. And finally, your bank loan, which is 50 lakh taka, will be your liability. Let's look at the assets part of balance sheet. Assets of the company summarize what the company owns. We have already said that there are two types of assets: non-current assets, which cannot be converted into cash in a short period of time, and current assets, which can be converted into cash within a very short period of time. Now, let's look at the balance sheet of assets part of balance sheet of Bata Shoe Company Limited. The assets of Bata Shoe Company Limited has two broad parts: non-current assets and current assets. Non-current asset includes property, plant, equipment, and so on. Current assets include inventories, trade and other receivables, and so on. And finally, there is total asset, which is simply the sum of non-current assets and current assets. Let's look at non-current assets, which is also known as fixed asset, in detail. So, assets which are normally fixed or long-term investment are known as non-current assets. It might include property, plant, equipment. Say, for example, Bata Shoe Company Limited uses its property, manufacturing plants, and equipment to convert raw materials to finished goods. So, we all know that finished goods of Bata Shoe Company Limited is mostly shoes or leather items. Non-current assets also include goodwill and other intangible assets. Let me give you an example of goodwill. For example, your company has investment on research and development. So your investment on research and development will build up your goodwill. In the meantime, if your company acquires another company, that might also increase your goodwill. And there are some other types of non-current assets as well. Now, let me give you a brief introduction about the valuation of assets. Accountants believe that value of assets deteriorates over time. So, they consider depreciation on asset. Book value of an asset is equal to acquisition cost minus accumulated depreciation. Over here, accumulated acquisition cost means purchase price of the asset plus installation cost. And you know about the depreciation. Accountants believe that value of the asset depreciates over the time, so they consider depreciation to reduce the value of the assets. So balance sheet will basically give you the book value of your asset. In the same way, you can also find out the value of goodwill, which is normally investment purchase price minus book value of the investment. In the meantime, there could be also amortization for goodwill. And the limitation of book value is that it does not represent the market value of the asset. So there might be different, it is more likely that market value of an asset will be significantly different from its book value. We have already told that a company uses its property, plant, and equipment to convert raw materials to finished. So, Bata Company Limited can use its property or equipment like generators and other equipment to produce its goods for its showroom. Let's look at current assets. So current assets are liquid, or in other words, current assets can be converted into cash within a short period of time. So current assets can be also the short-term investments. Let's look at the probable list of current assets. It includes inventories. So company keeps its inventories in its godown for sale. Account receivable. Not all sales are made in cash. Companies often sells their product on credit, so that generates account receivable, and cash is definitely a current asset. There are also other types of current assets. So Bata Company Limited holds its inventories. Once they sell their inventories, they receive the cash. So inventories are this is why inventories are current assets. In the meantime, when a company delivers its product, it also generates accounts receivable. When a company delivers its product, or when a company ships its product, it might not receive cash immediately. It needs to wait to receive the cash from the shipment. So that basically generates accounts receivables. Now, next lecture we'll focus on liabilities part of balance sheet.